Hello everybody, I'm Scott Shuey and this is your daily business wrap. Now, some of the stuff that's coming up this week is sort of exciting and some's not very exciting, but the one thing that's going to get everyone's attention is sanctions. Starting on Monday, the US is going to put full sanctions on Iran, which is going to have a major impact on the oil market. Iran typically produces about 10 million barrels of oil a day. That's going to be gone now. And it's going to be up to the OPEC producers and the non-OPEC producers, led by Saudi Arabia, UAE, and Russia, and maybe even the US to fill up that void. Now, can they do it? That's a big question right now in the market. And in the short term, you're probably going to see oil prices spike. How much? Well, we're not quite sure at this point. We saw them hit $80 a barrel last week, and it could maybe even go a little bit higher. We'll have to wait and see. In the longer term, we're gonna have to see what comes out of the US. Now, don't get me wrong, we're still gonna see a lot of ramped up oil production from Russia and from Saudi Arabia, but the big question has always been US shale oil and how much investment is going into that. That could make sure oil prices stay down. On a more local angle, we've seen more news out of the UAE today. The Supreme Petroleum Council has put out new guidelines for ADNOC. They're going to invest billions of new dollars into ADNOC to try to help them drive up both their oil production. They're looking at about 4 million barrels a day by 2020 and 5 million barrels a day by 2030. They're also going to drive up gas production. Now, why do they want to do that? Well, the short answer is we use a lot of gas here in the UAE for desalination and energy generation. And what they want to do is make the UAE self-sufficient. So if they can get all the gas from here and use it for desalination and energy, that's better for the country. The other thing we're going to see on Monday is the global markets. Now, the last few days have been very confusing. The last few weeks have been very confusing. We've seen markets go up, we've seen markets come down for a lot of various factors. We've seen interest rates coming up. We have seen US and China talk about various trade issues, and maybe we'll see some leeway on that starting this week, because we're hoping to hear comments from Chinese President Xi tomorrow at a conference in China, and later on in the month we're hoping to see Trump and Xi sit down to talk about US-China trade relations. The markets will be watching all of that. But what they'll really be watching is the US midterm elections, which kick off on Tuesday. Now, if you've been following US politics for the last couple of years, you know right now the US is very polarized. And these elections are some of the most polarizing elections in years. It's going to be more or less a referendum on the policies of US President Donald Trump. Now, what's going to happen? Well, the general predictions are that the Democrats may take back the US House of Representatives, but the Republicans will hold on to the US Senate. Now, what does that mean for us? Well, it means a lot of infighting there could affect the world economy. There's a lot of people who are concerned that you may actually see sort of a political gridlock in Washington over the next couple of years. If you think markets have been volatile over the last year, and they have been from as low as almost 23,000 to as high as almost 26,000, and up and down and everywhere in between. That will likely continue because the politics are not likely to get any better over the next year. All right, so we'll be covering all of this throughout the week. Check in on gulfnews.com/business for all the latest oil and markets information. And of course, on Tuesday, we're going to be doing live coverage. You'll see me and one of our reporters, Ed Klaus, giving you spot news throughout the night on the US election to see how that goes down. All right, everyone. Thank you for watching.